Hey everyone, Snap stock crackled and popped after reporting earnings that disappointed Wall Street investors. The stock price is down 35% on the day following the earnings announcement. Unfortunately, I had recommended Snap stock as one of my top stocks to buy in 2024. In this video, I'm going to update that recommendation. So you're going to want to tune in to see if I'm changing that, if I'm removing Snap from this quarter, bringing it out of my top stocks to buy, or if I'm keeping it there and reiterating the recommendation saying that maybe the dip is a buying opportunity. So that's what I'll do in this video. I'm going to review the company's latest quarterly results, and then I'll update my recommendation for Snap stock. So let's jump into the results. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So I highlighted that Snap stock price is down 35.24% on the day following the results. This is one of the biggest moves so far of this earnings season of all of the companies that I follow. A huge downward drop in the company's price following the earnings results. Let's take a look at the numbers and see why investors were so downbeat on Snap stock. All right, so revenue in the quarter of 1.36 billion in the fourth quarter compared to 1.3 billion in the same quarter last year was up only 5% year over year. Investors were expecting better from Snap given that the annual forecast for revenue growth is much higher than 5%, and given that other social media companies like Meta Platforms and Alphabet reported double-digit revenue growth in their most recent quarter, Snap is typically growing faster than both Meta Platforms and Alphabet. So the fact that Snap increased revenue below the rates where Meta and Alphabet grew their revenue was a bad sign for Snap stock investors. That being said, the company's net loss narrowed to 248 million, down from a net loss of 288 million in the same quarter the prior year. Remember, Snap has undertaken many cost-cutting initiatives that's improving the bottom line. The company cut jobs last year and then again this year announced hundreds of layoffs and a more focus on its core competency, not investing in new categories that are unlikely to generate revenue and profit in the near term. I've liked that narrower focus on the core. That's one of the reasons why I recommended Snap stock as a top stock to buy in 2024. Management really narrowed their focus, paid attention to profitability, reduced cost, and I like those moves from Snap's management team. And it's showing up, right? Even though growth narrowed, that's typical to see when companies cut costs. It reduces growth because you're not spending money on sales teams, you're not spending money on commissions, maybe you're reducing marketing spending. All of that leads to lower growth, but I'm okay with that if lower growth means better profitability, which we did see with Snap in the current quarter. So not only did the net loss narrow, but the operating cash flow of 165 million was better than 125 million in the same quarter last year. Free cash flow also increased to 111 million from 78 million in the same quarter the prior year. So the cost cuts are having their intended effects. However, the slowdown in growth was worse than expected. So investors wanted to see the cost cuts to improve profitability, but they also wanted to see revenue growth sustain. They wanted the best of both worlds. They wanted revenue growth in the double digits and cost improvement. We didn't get that. We only got the cost improvement. Revenue growth was much less than what investors wanted to see from Snap. So one of the most important figures I look at when I'm following the social media companies, including Snap, Meta Platforms, and Pinterest, is daily active user count. And for Snap, that increased to 414 million in the fourth quarter of 2023. That was an increase of 39 million users, or 10% year over year. That was solid growth overall for Snap, but I'm going to take a closer look at these daily active users, and we're going to see that it's not as good as it looks on the surface. Also, Snap launched a premium service where people have to pay and not access for free. And that subscription service has reached 7 million subscribers. That's good news. It's nice that this part is gaining traction. That's a diversified revenue source. Doesn't need to rely so much on advertising now. if it can really build out this subscription service to millions more users. All right, so here Snap gives us a breakdown of their daily active users and where they come from. And here's what I did not like about this quarter and year over year. So they mentioned they grew from 375 million daily active users to 414 million daily active users year over year. The thing I didn't like about that is that they didn't grow any users in North America in that time, 100 million and 100 million. That remained flat. And from the previous quarter, they actually lost 1 million daily active users from North America, from 101 down to 100 million. Most of that growth is coming from this rest of the world segment, where it grew from 183 million up to 218 million. And here's why that's not great news. Here, Snap gives us the average revenue per user, and globally it decreased by 5% from $3.47 down to $3.27 in the most recent quarter. And that's because of the mix of users that it's adding. You can see North America, average revenue per user actually increased from $8.77 to $8.96. But you can see in the rest of the world segment, the average revenue per user is actually 1/9 of North American users. Just $1.03 in the most recent quarter, which was down 7% year over year, and compared to $8.96 for North America. So the average revenue per user from users outside of North America and Europe is only 1/9 that of North American. So it's as if they're worth 1/9 the amount to the company for users outside of North America. So investors would much rather prefer growth coming from the North American segment, where the average revenue per user is much higher and the average revenue per user is growing year over year, versus the rest of the world segment, where average revenue per user is much lower and it's decreasing year over year. So that was not good news for Snap, and partly explains why the stock price was down so much year over year and following the earnings announcement. Still, looking ahead, investors expect Snap to generate 14.6% revenue growth in 2024. I would not be surprised if this revenue expectation is lowered in the coming days and weeks, or given the 5% revenue growth in the most recently completed quarter. So given the slower revenue growth, and given the forecast for lower revenue growth from Snap, I think this revenue forecast is going to be decreased for Snap in 2024. And that's going to have a further impact of pressuring the stock price. And then in 2025, investors expect Snap to accelerate revenue growth to 16.1%. So double-digit revenue growth expected for Snap in the next 2 years. Even though this is going to be decreased, I think still double-digit is reasonable to expect from Snap in 2024. And then Wall Street expects 15% per share earnings for 2024 for Snap, and that's going to increase more than double to 33 cents per share in 2025. So the cost-cutting measures will benefit Snap as it grows revenue to increase its earnings per share. So all that being said, now that the stock price has fallen by 35%, Snap is now trading at a forward price to earnings of just 28.21, which I think is a relatively cheap valuation for a company with the growth expectations of Snap, given how massive the total addressable market for advertising is. It's near $1 trillion market opportunity, and Snap is still growing, albeit the growth rate has slowed down in recent quarters. I like the prospects of this company, and so I'm keeping Snap stock in my list of top stocks to buy for 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.